All right. Good morning, everybody. Had a little technical thing going on there. No big deal. Let's get some charts up. All right. So a little recap. We had a nice little run at the end of last week on the lower than anticipated inflation data. And that created this little void below, not a big one. So really not a big deal. Little minor support level pretty close by. Things closed with a lot of red bars, gap reversals, topping tails, not big range expansion ones on the daily chart. However, because of that run, what we do see on a lot of charts is this wide range bar on the weekly chart. And it's coming out of a consolidation. That's a positive. So little resting period, range expansion bar. Range expansion bars on a higher time frame create voids on lower time frame, which opens up the possibility for a retracement. Now, when we say, okay, retracement to where? And you see, I've got this minor support level marked off there. And because this pattern of this consolidation that began in the middle of June, you have it made a marginal new high. We talked about slowing momentum, and then it pulled back to this support. Buyers stepped in again. The news came out. It accelerates higher. So at this point, what's going to push the market higher? I think we have to look to earnings, individual news on individual stocks that are coming out, upgrades, downgrades that might move those particular stocks. And I think as the market waits 2 weeks until the Fed announcement, which, I mean, it's at this point a given. If you look at the percentage that's predicted, it's 96% that they're going to do a quarter point. So it's going to be no surprise to anybody that they're going to do that. We did talk about the fact that the internals had reached an extreme together at the end of last week. So some type of corrective price action is anticipated, not only for the price action, but the market internals. And we'll see how much that develops. What we don't want to see, like in the coming week or weeks, is a deep retracement into this wide range bar, and certainly not a close. And this 4,400 level is a big level in open interest in puts and calls, but going out like 60 days. It's not immediate. There are some that are expiring the end of this week. That could be of some significance. So that 4,400 level, not only from a support level, wide range bar level, open interest level, major support on the daily chart, the area of it, it's a big level that should not be violated. Right, going out to September, McGraw is saying is up to September. It's tremendous, and so any kind of retracement here, just based on the uptrend on the weekly, uptrend on the daily, uptrend on the hourly, S&P 500, 4,600 could be a target. There's a pivot high there. Our bias should be that buying dips, put spreads, and then let's see what maybe gets a little beat up, during this period of time. And ultimately, in the coming week, how far prices retrace into this major support level or the lack thereof going sideways. The more it chops around here will be, I guess, somewhat frustrating that there's no movement as far as the market goes. That could be fine for put spreads and call spreads, 0 DTE. As we wait before we get closer to some news. I mean, earnings and so on. VIX expiration is Tuesday. All right, cool, McGraw. And what levels are in focus as far as the VIX goes? 14 key strike. Okay, so not far away. As we look at the volatility index, it's been low for a while. So this should reinforce for anybody this little saying that used to go when the VIX is low, it's time to go. No, it's not. because as you can see, it can stay low for a while. As it comes down to support, you see it actually broke this support. Yeah, risk is growing, but this is why we look at other market internals. So the VIX being low is one thing to look at. Now it's relatively low compared to this data, but now the internals reach an extreme level together. Breadth and sentiment tells us that risk for longs is increasing. Now, it doesn't mean something's going to happen today. It rarely ever does. So, we'll just see how this progresses. We're saying we can see a little pop in the VIX. On Wednesday, maybe we could also see SPX up, VIX up. Yeah. So look, historically, when the VIX goes up, the market pulls in. And unless there's a significant move, and McGraw's telling me that 14 is the key level, I made that a little high. Anyway, just kind of whatever. It's on the support. Typically, when this goes up, market comes in. Now, okay, granted, but internals are at an extreme. We've got a little void because of that acceleration. And to have a bias that's some kind of minor retracement, right? Minor retracement is a very reasonable bias or expectation based on all of this. So some risk for longs, which also means that if you've been waiting for XYZ to break out of this consolidation, moments like this are when breakouts have a tendency to fail because of the reasons explained. So something to keep in mind. Where are things right now? They were down a little, gapping. Well, it was gapping below that red bar, that gap up bar, but right now it's kind of in the middle of it. And what's that? What a cup and handle continuation is it not? Looking at the S&P, no, it's not a cup and handle. So by definition, if you read the book, How to Make Money in Stocks, I think was the name, by the guy that created Investors Business Daily. The definition as they define it was, stock made new highs. It has a correction, the market has a correction, and it pulls back whatever the percentage was at the time. My memory, that book I read probably 30 years ago, whatever it was, pulls back maybe 10 or 15%. It shows some relative strength. And then, from that pullback, right, you had a strong stock. It pulls back in bottoms. It starts to move up. That's your cup. And then it has this minor correction. That's your handle. And, all of that with market timing, then it starts to go up again. So this is not a cup and handle. Right? This is just what I'd call a consolidation within an uptrend or a little time correction that was happening at that time. So, let's not make things overcomplicated. So keep an eye on these wide range bars that formed in a bunch of sectors and a bunch of stocks on the weekly time frame. We've got a bullish daily pattern. We've got internals that have reached an extreme. Expecting some kind of corrective price action here is reasonable. So let's see how things play out. Okay. Where I get to SPX, just look at the futures, and you can see the topping tail that formed, and minor support is close by. So look, unless there's some news that comes out that shakes the markets, traders, I think things are going to be relatively choppy. So little sideways action up there, a little breakout, a little failure, got a little void below. Whatever the pullback is, you've got a rising 20 MA, you've got minor support. You shouldn't see anything collapsing here. Okay. So SPX, 45.25 is what I had up above. Jake, I don't know you, 45. There's no premium there. 45. There's no this. And now they've zeroed out my bid and ask there. I mean, that's not what I was looking at before, because 45.25 just seems ridiculous to I'm looking at the futures there. is up above this high here. How you can get to 45, 45, and the market would have to go up to get up there. So I don't see that as happening. And down below, before things zeroed out, I had 44.70 written down, which basically we look for a strike that has 70 by 80, 70 by 90, something like that. And then if there's some trend pre-market where things look like they can go, higher or lower, then you could wait a little bit, to see if they could drop. Yeah. So 70 is down here. Granted, it's not that far away, but, it's got to come down into this area, and it's not a no-brainer, that's for sure. But, to say 25, is that a Britain? No, these things are pretty tight as to, they're not what we saw months ago, whereas, you need markets to move like with, some rapid movement. And then you have, if it's up or down, you have these institutions running to buy calls if it's going up, or puts if it's going down, and then they overdo it, and then the premium pops, and you can get far enough away. So McGraw's telling me 44.75 should hold. Okay, so there's a gamma level 44.75. I guess there's some big open interest there. And why everything's zeroed out there? Oh, I see what happened. 44. I'm just looking. Okay. So I think, what McGraw is telling me in the room here, as far as levels related to open interest and gamma and all that, it lines up with exactly what I'm telling you without looking at that precise information, just based on the technicals and what I've explained, that we're not likely to get some kind of significant movement here until the market gets more information to assess what's going on. What is that significant information? Interest rates. They came down, like the proverbial rock off the roof. As the lower than inflation number came out, they're stabilized here on support. They could rise up. As long as they don't rise up very much, I don't think the market's going to get rattled by that in any way. If they break below here, I'm not so sure the market's going to like it. I think the market would just love for this to just sit here and rattle around and not do much of anything. The 5 years, same story. The 13-week, it's just hanging up here. It should go up as we get closer to that Fed announcement, which is on the 26th. And, looking at other markets, the Dow has tried 3 times to get through this resistance up here, which is significant. And it just flips, flops back and forth. You can see the weekly chart. Maybe if it went sideways, chopping around here for another week or so, maybe it could break out and move up into that void above. Maybe not that big of a void, but you just got all these overlapping bars, so there's nothing happening there. The NASDAQ has had a nice little run, and I'll point out again the wide range bar. I'm going to tell you that when you see this pattern of a consolidation and a wide range bar, it better go up. Right? So you can get a 1, 2, 3. This could be a consolidation week that does nothing and it stays in the upper half, but it better go up, because if it breaks below here, right, and this is near some resistance, which you can see as I squash that up, it breaks below this wide range bar, the expectations become crushed. Everything I explained, this is supposed to go higher. And I'm not saying it won't. I'm just saying that if it breaks below here, probably the proverbial S is going to hit the fan because there's a void below. So just be open-minded. Big improvement in the small caps, the Russell, that's good. So lots of good stuff. Now, when you got lots of good stuff, it needs to follow through. Otherwise, it's a problem. And we're going to see if it follows through. With the interest rates coming down, and this is kind of strange but interesting. Yes and no. I mean, the 5-year came down hard. The 10-year came down hard. The Fed measurement of what the Fed is going to do stayed up there, the 13-week. So what does this tell us? Well, what this communicates is that there's a belief that after this quarter point, there's a strong belief that the Fed's not going to do anything. So you don't have that floor rising short-term interest rates under the currency. And so this fell sharply. And so we want to keep an eye on this to see, does it start rising back up again? That would tell us that there would be some changing of opinion, which isn't right now. So with that being said, I'm going to hand it over to Dan. We had this little technical thing this morning, so we can cover enough time to cover opens and what have you. All yours, Dan.
Good morning. I don't have any alarms going off, so all our opens are fine. And even new trades usually, they'll be going off here at the open, I'm sure, because I have a ton of alarms. So well, let's just go right to my interest list. I don't have any earnings for today, but obviously earnings season started last week with the banks. Wheat, I saw. Wheat and Chewy are two little gap trades. So this is a breakdown failure, and it's gapping up here to 680 with a void. So that's a beautiful gap setup. Upper left, you can 15-minute chart, you can see my pre-market and see what it does at the open. I got it in a 5-minute chart, or no, let me change that to 5-minute chart, and we'll see what it does. And then Chewy is another one. Got to upgrade. Let's see, this trades crazily, but now it's gapping up to 40 bucks. So that would be a breakout from the last 3 weeks or so. And then the weekly, monthly, I have room to go. So this would be a great 30-minute high trade. Patrick, interesting. So that's, but why would that make it go up? I guess restricting supply, higher demand would, I guess, be my initial answer. Yeah, McGraw, absolutely. Well, we can look at a put spread on that. Yeah, or higher. All right, right in here. This thing was a rocket ship. A lot of these meme, M-E-M-E is actually a meme ETF. And this thing's been ripping recently. And we were the beneficiary of a number of those because we've been in them too. We're in this in our ETF trader. And this is a great example of a wide range ending. And after a big move like that, so we sold a third of ours, which is right into that strength. But a number, the coins and the mining stocks, a lot of those meme things have been ripping. Raoul Stone. It's a sell setup. That was a powerful move there, so I would not expect a new low, but it's an end of day base. So yes, that's a nice short setup under Friday's low. Yes, I'll write it down too. Stone. I just had a T2 alarm go off. Oh shoot, I see one print up here at 152. Let's see, this is a little buy setup there. Jose NDXG. That's a hard one to remember. Yeah, so NDXG is not correct. Workday. Workday going sideways. I don't see any gappers, but a definite put spread. If the market holds up and this takes out Friday's high, yeah, definite put spread I do on this. It's not a great directional for me because it's just in a trading range, and that upside got rejected, that one rejected, but Friday was a closing new weekly high, so that's good. MJ, can we expect him to hold up? That is a multi-million-dollar question. This thing, we're actually in it. We have long calls on this, these two power It's like a bear sandwich, but the meat is double deckered. But then it had a beautiful close Thursday and got rejected Friday. So is it going to hold up? I don't know. I don't know. But you know, if you're in it, your stop better be under this WRB, which ours is. If you're not in it, I would stay away. That's not a nice pattern. BTU, yeah, that was a beautiful 1, 2, 3 on Friday, and still has room. So yeah, I like that. That's a good day trade short. And then you can decide how it closes if you want to hold it as a swing. Lou CELH. Yeah, you all are finding some good stuff here today. Yeah, that's beautiful. That's a nice breakout, closing breakouts. So my only, yes, I'm going to trade compelling bullish patterns, but as we said with the internals, we just gotta be a little bit more leery because I like to trade with the tide. And if the tide's coming in, then even beautiful patterns can fail. Yeah, package, another breakout. Let's put that on the list. Yeah, that looks great. Package and CELH Ford. Yeah, it's an M top. It's down here pre-market. So I think, you could get a better entry on a bounce. MDXG. Yeah, you all are finding good stuff today. What I like about this is the 180 reversal and closing breakout. So yeah, we got 3 nice breakouts here, you all. MDXG, package, and CELH. Those are all 3 breakouts. Where did I leave off? Twilio and Raiden. We'll keep an eye on those possible call spreads. Yeah, so this is where I started talking about the meme stocks. This thing just blasted. But yeah, we can look at that for a call spread. AT&T getting downgraded. Look at the volume there after down a lot of bars. Now that it's getting a downgrade, I mean, why didn't they downgrade it at $20? You wait till it's down 35%, kick a dog when he's down. I'm gonna leave it on the list to see if we get an exhaustion. All right, so Chewy, Tesla is in the news about they got a new truck out. Their new, that ugly truck. So, but that was a closing breakout. That looked higher. All right, now I've got a couple of alarms going off. MVIS. All right, that was a double bottom. That's relative weakness now. Target. We were going to do a call spread on this. Look at bottom right. Chewy coming in hard. So see when they come in, when a bullish gap should not come in hard. It's still, McGraw might be okay for a put spread if it stabilizes right here. But, you'll get higher premium, but, I'm surely not doing it within the first minute of the day. Hey, this LMT, this is a beautiful bottoming pattern. I would have definitely put this in as a breakout trade. This is a bear sandwich breakout, but it has earnings tomorrow, I think. So that's the problem with that one. And TJX alarm, that's a buy setup to all-time highs. XBI. XBI. Looks good. Charlie Foxtrot is